In today's video, I'm going to show you why human nature never changes and why most traders, especially retail traders, never make any sustainable gains in the stock market. Many retail traders make gains, but they usually tend to give them back. So over time, they don't generally make any real money. So here's the problem with human nature. Greed is universal to all humans. It's not just it belongs to bankers or pharmaceutical CEOs or whatever. Everybody is greedy. Everybody wants more. And the problem is that very few people can delay gratification. So here's what happens. Traders tend to focus on where the momentum is at the moment. And the problem is when the momentum is starting, and I've got a chart of Bitcoin here. This is a pretty good example of what I'm talking about. But when the momentum is starting down here, especially, if something has just been going sideways like this for months and months and months, that nobody's ringing a bell down here to tell you that you're about to embark on a huge momentum move that is going to produce some really nice gains. So what happens is you don't trust the move when you get the initial breakout, or especially down here when this was the prime place to buy, but in real time you don't know if this is going to go a lot further down, so you can't buy here. And then even if you do, then you get into this long, frustrating month after month sideways grind, and eventually you just give up, and you just decide that you're never going to make any money in this thing. You give up, and then the momentum move starts, but in real time you don't know that that's the beginning of a strong trending move. And so what happens is you let a big chunk of the move pass you by before you become convinced. And then most people, they're going to buy up here, because at that point, everybody notices what's happening, and a lot of people are making a lot of money, and you want to make a lot of money, so you want to jump in to this move because you're convinced it's going up. And it never occurs to you that being late in a trending move, you've now forced yourself to try and pick a top. Otherwise, you're not going to make any money. If you don't pick the top correctly, then you're going to get caught when the momentum runs out of gas and goes back down. And that I saw this happen. I kept warning people over and over when we were in this zone here that the momentum move was very mature. We had stretched obscenely far above the 200-day moving average. This is typically what happens during a bubble. And at some point you had to control greed, take your profits, and then get on the sideline, or maybe start looking somewhere else for something else that might give you a nice trending move. You wanted to find something else that was just starting, not something that had already gone on for a crazy amount of time and produced insane gains, and just expect those gains to keep going. I kept hearing at this point, about 100,000 and 1 million, and then what happens is all these people got caught. And so anyway, if you're late to a move, then you forced yourself to try and pick the top. And then when you don't pick the top correctly, when we first got this first semi crash here, I warned people that these is probably not the end of this. That usually you get an ABC move before it's done, and of course being stretched really far above the 200-day moving average. The rubber band principle came into play. The further something stretches away from the mean, the more violent the move tends to be back down to it. So not unexpected that price would come all the way back down to test this 200-day moving average and even went a little below it. And then I warned people that most bubbles, when they pop, they have some kind of double top or a test of the top. And this is exactly what we've got here. We've got a double top, and then a much deeper move back below the 200-day moving average. That's a warning sign, and the 200-day moving average is now turning down. And I'm not sure that price is going to be able to get back above this 200-day moving average. But anyway, this is an example of of people chasing momentum and then getting stuck, um, and unable to adapt when the market changes. So, at this point here, people needed to listen to me, take some profits, and then start looking somewhere else for the next trending move. And so, of course, we've had a really strong trending move in the stock market ever since that bottom, and there was the potential anyway for this to kick off a bubble phase, and I gave it the benefit of the doubt. You've got to give it the benefit of the doubt because nobody's going to ring the bell when the final parabolic bubble phase starts. So anything that looks like it might be, give it the benefit of the doubt. And it turned out that the Fed started talking about tapering and raising interest rates just in time to short circuit what was probably going to turn into the bubble phase. So anyway, now this is the momentum is done in the stock market, and we're probably going to be in a volatile sideways churn for a long time. But traders that got very comfortable with this momentum and the easy money being made in stocks are having difficulty letting go of that trade. And as usual, they probably leveraged too much towards this top here, and then got caught when the Fed started tapering and talking interest rate hikes. And if you're heavily leveraged, then you end up giving back all of the gains that you made on the way up. This is another big mistake that many novice traders make, is the further a move runs, the further the momentum travels, the more convinced they are that it's never going to end, and so they start to leverage really heavy. What you really should do is the further this goes, the more cautious you need to become. So anyway, the momentum has petered out in stocks, and we're probably going to be in store for some maybe the entire year, just some very volatile back and forth, difficult trading. I doubt we're going to start another momentum move that'll take us to big new highs anytime soon. And so as this was coming to an end, energy was starting to take off as oil came out of this intermediate cycle low. And now the same thing is playing out, where we're very late in a very mature, very strong move. And I'll say again, as I had before, I think we have years left on this move, but we are getting into the timing band here sometime this year where we're going to be due for commodities to move down into a 3-year cycle low. So this move is getting very mature. So people are starting to, it's starting to dawn on them that they're just, it's just difficult money in the stock market, and they've got to give up on that market. And so now they're focusing all of their energy in, or focusing all of their trades in energy, and almost certainly they're leveraging up here, and they're doing it very late in this move. We're almost 2 years into this move, and so they're forcing themselves to pick the top, and if they don't pick the top, then they're going to give back all of their gains. And I would argue that you need to be getting cautious on energy here. There's too many people are all piling into this because this is where the money is being made right now, and that's great. The problem is if you hang on too long to this trade, especially if you leverage up, then you're going to give all those profits back when the momentum comes to an end, and the commodity complex, and especially oil, start down into that 3-year cycle low. Now, on the other hand, the potential, in my opinion anyway, is probably in metals. They have gone nowhere for over a year and a half. So everybody has become despondent on metals. They don't believe that there's any scenario where metals can move again. But this handle of this cup and handle pattern is going to produce a huge move once once we break out of that. And again, nobody's going to ring the bell for you and tell you when the momentum is starting. And for the vast majority of people, we'll have to go probably above 2,100 and maybe even as far as 3,000 before they'll trust the move, because they've become conditioned to expect only frustration and disappointment in the metals market. But the metals market is behaving well. Even though the dollar has been going up, gold has just been going sideways. They have not been able to force gold down and make a lower low than this pivot, even though we've had here's an intermediate cycle, and it kind of looks to me like maybe this is another kind of a weird looking intermediate cycle low. So we're not able to make lower lows here. We haven't made a higher high yet, but we haven't made lower lows. So this is looking constructive to me, and I want to give this the benefit of the doubt now. I want to become cautious on energy, because everybody is now, by now they've all taken notice, and they all know that the easy money is in energy. And that means that just like stocks and just like Bitcoin, it's probably get close to the end where it's all going to be hard to make money in energy soon. And that hot money is going to flow into something else, going to look for somewhere else that's trending. And the big institutional money will get in early before the trend starts. The retail money and hedge funds, they get in late, like they did in Bitcoin, like they did in the stock market, like they're doing in energy. And they'll be late to the metals trade too. But I want to give this is where the potential is, in my opinion. The 200-day moving average, it's holding. They're not able to get any sustained follow through to the downside when they break below that. And we're trying again. We tried yesterday. The cartel managed to beat gold back, but we're fighting that off again today, and we're trying again to break through this. We'll call it 1835 to 1840 resistance zone. So that's the first line in the sand. Then we've got to get up here and break this daily cycle high, and we're still very early in this daily cycle. So the rule applies. If we can break out above this early in this daily cycle, then there is the opportunity for a sustained breakout. If we churn around here for 2 or 3 more weeks and then break out above this, and we're 35 days into the daily cycle, then no, it's not going to be a sustained breakout, and we're going to be stuck with more sideways churn. But if we can get up here and break through this by sometime next week, then we have an opportunity to come up here and break out above this intermediate high. And at that point, it's game on. The pattern has changed, and we will then have a higher intermediate high. So I want to give this the benefit of the doubt. I'm becoming more and more cautious on energy as the average trader and hedge fund manager is becoming more and more bullish on energy. 90% of them are going to get caught because they're not going to pick the top correctly, and they're going to give back all their gains. In metals, we have the potential to maybe be getting in close to the bottom and riding a sustained move for something where we're not having to pick the top in order to keep any of our gains.